Imagine turning $50,000 into $250,000 in property assets, not through get-rich-quick schemes or risky speculation, but through a time-tested strategy that wealthy investors have used for literally generations. Today we're talking about leverage, the single most powerful tool in property investment that can accelerate your wealth significantly. So, what exactly is leverage in property investment? Simply put, it's using borrowed money to purchase an asset that you couldn't otherwise afford. So instead of buying a $500,000 property outright, you can potentially put down $100,000 as a deposit and borrow the remaining $400,000 from the bank. So I want you to think of leverage as like a financial amplifier. So just like a lever can help you lift a heavy object with less effort, financial leverage helps you control a much larger asset with less of your own money. The bank becomes your partner, providing 80% of the purchase price while you contribute potentially only 20%, and we're ignoring property taxes and other costs, just for simplicity's sake. But here's where it gets interesting. You own 100% of that property and benefit from 100% of the growth, even though you only invested 20% of your own money. So let me show you why this matters with a real example. Let's say Sarah has $100,000 to invest, and she's got really two options. Option one is to buy a $100,000 property outright. Again, that's not particularly realistic given today's market, but for simplicity's sake, she buys one for $100,000, property outright with no loan. Option two is to use that $100,000 as a deposit on a $500,000 property, borrowing $400,000. Now, let's fast forward around 5 years. Property values have gone up by a fairly modest 5% per year, and that's around, over the 5 years, 28% in total growth. Sarah's first option, her single property, is now worth $128,000. Sarah's first option, her single property, is now worth $128,000. She's made $28,000 profit. Sarah's leveraged approach, option two, her leveraged property is now worth just shy of $640,000 total. And even after paying back the loans, her equity has grown from $100,000 to $240,000. She's made $140,000 profit, exactly 5 times more than the unleveraged approach. And this is the mathematical beauty of leverage. It multiplies your returns proportionally to your leverage ratio. But leverage isn't just about capital growth. It also opens doors to cash flow opportunities and tax advantages that wouldn't exist otherwise. So when you leverage property purchases, you're buying investment properties that tenants pay rent on. This rental income helps service the loan while you wait for long-term capital appreciation. Now, in many cases, the rent covers most or all of your loan repayments, meaning the property pays for itself while growing in value. From a tax perspective, leveraged investment properties offer significant advantages. Interest on your investment loans is typically tax deductible, reducing your overall tax burden. Depreciation allowances can further enhance your tax position, sometimes creating negative gearing scenarios where your property investment reduces your taxable income. Now, it would be irresponsible of me if I didn't address the potential risks as well. Leverage is a double-edged sword. It amplifies both gains and losses. If property values fall, your losses are also magnified. If you can't meet loan repayments, then you could also face foreclosure on your home. The key is intelligent leverage, not necessarily maximum leverage. So smart investors first maintain adequate cash reserves for unexpected expenses and vacancy periods. Second, they choose properties in strong rental markets with good long-term growth prospects. Third, they stress test their finances against interest rate rises and economic downturns. And fourth, they ideally diversify across different locations and property types where possible. Remember, leverage should enhance a good investment strategy, not replace due diligence and careful property selection. So how do you harness leverage responsibly? Well, you really have to start by getting your finances in order. So building a strong credit history, obviously, saving for deposits and understanding your borrowing capacity. Most banks will comfortably lend up to 80% of a property's value for investment purposes. I would consider starting with one leveraged property, mastering that process, and then gradually expanding your portfolio. Each property you successfully acquire and manage builds your experience and often increases your borrowing capacity for future investments if done correctly. Working with an experienced mortgage broker who understands investment lending and always getting independent financial advice is really, really, really important. So, leverage isn't just about taking on massive debt, it's about using other people's money strategically to build wealth faster than you could have with cash alone. When used wisely, leverage transforms property investment from a slow wealth building exercise into a powerful engine for financial freedom. The question is not so much whether you can afford to use leverage, it's whether you can afford not to.